Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's October 16th. And I'm Frank Curzio, it's the Wall Street Unplugged podcast where we read the headlines and tell you what's really moving these markets. Bringing Daniel Creech. What's going on, man? How's everything?
Everything is great, Frank. Happy Wednesday. Welcome back. Where the hell were you?
I know, right? I was in the middle of nowhere. It's so hard to get to Vancouver from Jacksonville. You have to take two flights, at least two flights, but it's usually two flights. And it was crazy. I mean, my first flight, what did I take? I upgraded to first class.
Of course you did.
Yeah, I upgraded to first class. It was really cheap, and it was on a United flight. I know why. So the plane was 35 years old, I think. So no TVs on the back or anything. I went there, left early. Coming back is always a nightmare because with the 3 hour time difference, it's like you're getting home like 10, 11, 12 o'clock at night no matter what.
Yeah.
And we came back Thursday.
Where do you go, Jax to like Texas or
Anywhere.
Jax to
you
Colorado?
Go to Houston, you go to Chicago. It just depends. What's easier. If you're flying Delta, it's usually they'll go from Jacksonville to Atlanta and Atlanta straight there, which is pretty cool because at least it's a quick flight and then you're on for like 5 hours or so.
Yeah.
But it is hard to get there. But I miss Vancouver. It's really cool. First time I've been there in a long time. And by the way, I flew. I don't think I told you this. I flew during the hurricane. So when I left, it was a category 1, then it went to a 5. And it's so funny, right? how when you live in Florida, it's, we know what's going on here. And when, my friends were emailing, it's storm of the century. It's a category 6. That was from USA Today. So when you're in Vancouver and you hear this stuff, it's crazy. But we knew that it was going to be a 3 before it even hit. It was going to go back to a 3. But nobody wants to say that, especially if you're watching the Weather Channel, because that's not a good story. It's good, So the hurricane wasn't as bad as they made it out to be. And you got some help.
Not here, yeah.
Yeah, you got some help, right? It went south, so you didn't have to worry about, the massive flooding and everything. But it did hit, Sarasota, a couple areas pretty bad, but they would talk about it being like one of the worst hurricanes that ever hit Florida, and it wasn't. But it's just funny how the stories that come out that you're reading, even when I'm in Vancouver and they're reporting even over there. But it's like, all right, guys, take it easy. It's really, we knew it was really south now, so it was just, we didn't get impacted, so hopefully everyone's safe in Florida, in Jacksonville. But anyway, when it went to a category 5 right away, my family's like, what are you doing? I was like, I'm not going to be in Florida. Hell with that. I felt terrible. But it calmed down. Everything was okay. But I tell you, Dan, going to Vancouver, I felt like, I think I mentioned this to you, I felt like Warren Buffett. Man, what a hated area where these mining companies, I get it for the past few years, it sucked in that industry. But you have gold at all-time highs. You have silver surging. Right. And yet and this is junior miner territory. Don't think about the majors. Don't think so much about the mining, the royalty companies, right? Those guys benefit from higher prices, right? They're able to participate as, because they're actually selling the gold or getting a piece of it for a few royalty companies. But the junior miners have not really seen this move high that you normally see when gold prices go higher. And I think gold prices are going a lot higher from here. I think you're going to see 3,000 in a few months. And we're closing in on at 2,700 or whatever it is today. But it's amazing how they're not being funded. They're looking for investors. And when you look at some of these companies, they're not all created equal. There's some companies that have done a great job over the past 5-6 years buying assets dirt cheap, waiting for gold prices to go higher. And they thought that would happen at 2,000, 2,100, but inflation moved much higher than the price of gold in that industry. When it comes to tires, when it comes to hiring workers, supplies, everything, right? Just building. For me, I underestimated that part when it came to gold. Not that we recommend a lot of gold stocks because we haven't in the past few years, maybe 1 or 2 of them. But at 25, 26, 2,700, now you're seeing these margins expand. But now it's been so much underdevelopment that you have to look at these projects and say, okay, where is the gold going to come from in the future? And the permitting process is a fucking joke because of environmental concerns. We know those guys are fucking assholes. They don't give a shit about anything. We know that, right? That there's just no rhyme or reason behind it. We're going to cancel it no matter what. It's a no. It's like asking your HOA if you could do something. Just do it. Don't ever ask because it's a no. And even if it's a yes, it's going to take you 6 months for the approval. Just do it and be like, I didn't know about it. I'm sorry. I cut down that tree that was going to fall on my house. I'm sorry I didn't know about it. Just do it. But hopefully, they speed up that process a little quicker. We're going to need that for uranium, which we'll talk about later. But going to this area and seeing, it's like crypto. You have 10% of the whole industry is really good. 90% is still shitty. projects that would never get developed. But that 10%, these companies are trading. I mean, it's unbelievable. You look at the gold ounces in the ground. If you look at some of even the uranium kind of junior uranium companies that raised money and bought uranium and benefited, right? So now they're flush with cash on their balance sheets. They have uranium. Some of these projects also have, gold coming in and royalties coming in. When you look at they're almost trading the cash value of their assets. Not even their assets, their cash and investable assets. Meaning that your downside is extremely limited and your upside is 3x, 4x, 5x, which usually happens during this cycle. And just going there and going to different companies, you're going to see a lot of new recommendations. I wanted to go there personally and just talk to a lot of CEOs, which I did. I went out to a lot of dinners and stuff. I actually went to Vancouver Canucks game, which I'm glad we left after the middle of the game. They were up 4-1 and they wound up losing the game.
Oh, wow.
In overtime.
That's entertaining. We should see some goals.
Yeah, so which is pretty cool. But man, it's ripe for the taking, that industry, if you have a 2-year time horizon, because a lot of these companies are fully funded. They raise money already. It's just, I couldn't believe the value that you're seeing there along with the growth. It's not like, I hate saying that you're going to buy something on sum of parts. If you hear someone mention sum of parts, sell a stock, it means there's no other reason to buy it other than if you sell off the company, it means there's no catalysts. It's not the sum of the parts. It's just when you look at the valuation of these companies, there's such limited downside risk because they're flush with cash in their balance sheets that the upside isn't based on value. It's based on growth. Where you have to see these projects get developed. You have to find more gold, more copper. I mean, just total underinvestment over the past decade, even longer. It's really exciting times, guys. I think if you're a subscriber to any of our newsletters, you're going to see a lot of those gold mining companies, price silver companies, uranium companies, in the junior mining space. You're going to see them go into a lot of our small newsletters, small cap newsletter, Curzio Venture Opportunities, even AI. It's incredible evaluations that I'm seeing here, and I think it could offer amazing, amazing opportunities for you guys going forward. But it was good. It was a good trip. I'm glad I went. I haven't been there since before COVID, because even 2 years after that, I don't think, it was like, communist Canada, basically. So if you went there and you got COVID, you had to stay there for a bunch of weeks. I didn't even want to go near it, right? Until it wasn't so bad to pass probably 18 months, but it was a little nuts there. But now it was really good. Everything was cheaper. It was a lot of fun. It was busy in terms of the restaurants on Tuesdays and Wednesdays. I was surprised. But overall, these guys are really struggling, and that's when you want to go in there, because you could dictate your terms. You could help these companies out. It's going to help with our consulting part of our business, because they're looking to get more eyeballs on their stock. They're looking in help and how to tell their story, and that's what for our business, Curzio Research, what we're getting into. It's a lot of fun right now because a lot of these companies need help, and they pay a lot of money to do this. So it's going to result in us doing very, very well in terms of revenue and things like that. So I'm looking forward to working with a lot of these companies. I wanted to see them firsthand. But you're going to see a lot of those names show up in the newsletter. So,
well, good. It sounds like you had a good trip then.
Yeah, it was a lot of fun. It was a lot of fun. Just surprised how depressed it was and how the investment banking firms just don't want to fund these companies because there's so many good ideas. I mean, stocks are at all-time highs. You have AI. You have so many things going on that are cool that that easily get into. Even marijuana is going to try make a comeback. There's going to be a lot of states that are going to approve it. Florida's supposed to be able to approve it as well for recreational use. So, again, there's just a lot of different areas outside of mining that they're like, hey, it's more bang for the buck. A lot of people still hate mining. They're going into Bitcoin. Maybe, just for some of those crazy, what I'm talking about, people out there who just shit on Bitcoin, the gold bugs and shit. Maybe you stop shitting on Bitcoin because, they're stealing your thunder. You're in a bull market for gold prices, and it's the first time I think you could say in history that gold has surged incredibly, and you haven't seen it fall through the most speculative names in the industry. You always, when an industry does well, you usually see the most speculative names outperform by a mile when over the large caps. And then the reverse happens when these industries decline or fall into decline. The best companies hold up well and the small companies get annihilated. These companies have not participated in one of the biggest bull markets in terms of the commodity ever. I think that's going to change. They're going to get re-rated if you're picking the right stocks. And that's why I went to Vancouver to try to find you guys some more ideas. So it's lots of fun. Lots of fun. So,
good deal. Well, while you were gone, there's a couple of things that came across my desk when I was running the show here, and I wanted to ask you your opinion about it. Number one is Tesla and Elon Musk had a big reveal. Frank, do you give more flying Floridas about the Robotaxi and humanoids that they announced, or his SpaceX rocket landing, not just landing, but landing
Being caught. Yeah.
In these, I mean, it goes through these, not tubes, but that was absolutely unbelievable. I don't know if you have it on your screen. I know everybody listening to this has already seen
I mean, it's incredible.
a video of this.
It really is incredible.
But it's one thing to me in my silliness and dumb it down to my level. You think of launching a rocket, landing a rocket. Okay, that's cool. I can't even fathom how cool that is.
That's insane. Yeah.
You land or capture this rocket up against its holding and its placement. That is really impressive. And I'm a critic of Elon Musk in a lot of ways. But what did you care about most, Frank?
I mean, he had some week. Holy cow. I mean, the Robotaxi is disappointed, right? Okay, fine, stock got hit. But man, those robots, and by the way, those robots, just when you see them and you could talk to them, they weren't totally AI generated. They were being controlled, right? Still. So just, you know, just for the record, which is still unbelievable. But if he really believes that these things in 2 years are going to be able to be sold for $20,000, you're going to see, I mean, that's less fit for the Robotaxis. So you're looking at Robotaxis going, is this ever going to happen? We didn't get details and the stock got hit. I think Tesla's really ripe to be bought here. It's amazing what, and the last time I bought it, I made money off it. It was at 140 and I bought options on it and the thing really took off and I did very, very well with it. I've traded Tesla very, very well. I've been right on Disney. I've not traded that one as well. But the week that he had in terms of, you know, the robots, the Robotaxis were really cool. Again, people want the more detail on it when they're going to come out. You really didn't get that. And you saw Uber and Lyft actually go higher because that threatens their business model tremendously. Yeah. I think that eventually it is going to happen. I was in another Tesla car, and just the technology in Teslas are amazing. You know, for someone who has a Tesla, they're probably going to laugh when I say this, but I never saw this feature, which is a big feature because when I drive and I have my truck, I usually always had trucks. There's huge blind spots to the point where I have to turn a little bit. And again, I've driven New York City. I've been driving all my life. I consider myself a very good driver. But with the technology that they have, they show like the car driving in the middle lane and people going across the street. They show the cars on the side and stuff like that. And you have lights on there that light up now in the mirrors with the technology when you do have someone in your blind spot. But it's just amazing how they're light years ahead of everyone. And even with EVs, you still see in the majors, they can't scale EVs. If you're looking at all the, I think of how impossible they made it for this guy. And just with Tesla. I mean, they've been producing since 2008. Yeah, they sold over 1 million Model 3s in 2021, and companies still can't get this right. I remember about 3-4 years ago, they had the Ford CEO, the former Ford CEO, who was on TV. I think Fields was on TV today talking about something. I didn't see it on CNBC this morning on Squawk Box. But he was saying how difficult this process of getting all the chips. There's so many moving components, and it's like 10x the amount of chips that you used to use, even in EVs, to make everything work together seamlessly. And it goes to the engineering behind what he's doing. So, and as amazing as a robots are, as amazing as a Robotaxis is, I think that if you look at the rockets, it's times 50 that.
Yeah, I agree. As far as coolness,
I mean, to put this in perspective, guys, I don't know if you really read the story, just saw it. I think the rocket was launched just a few minutes earlier, if I'm not mistaken, like 7-10 minutes earlier. And then, you know, traveling speed of sound coming down just as fast and being able to light these engines up to, you know, reignite them to slow the rocket so it could be caught by the launch pad. Yeah. It was an unbelievable achievement. It was remarkable, actually. And to put in perspective, SpaceX, just like when it comes to EVs, where we're seeing, you know, how many have been able to scale so far? Almost none of them outside of China. And this is with all the headwinds he faces, with all lobbying dollars against him. I can't, you know, have just, you know, you can't even go have like just started, right? Where you could actually go into a Tesla dealership, right? With very few dealerships at the beginning, everyone's saying he's a threat to national security. The Justice Department investigating him every single step of the way, right? And that's the left going after this guy. Like, he's really a threat to national security. All this shit, and he's able to accomplish this is amazing by itself. And the fact that all these EVs get recalled all the time. Let's talk about SpaceX, because they launched over 300 rockets since 2015 that have landed back on Earth. This is 2015. There hasn't been a company yet to do this. Okay, so we're talking about pretty much a decade. Jeff Bezos, remember Blue Origin? Not even close. NASA, not even close. Bunch of companies out of China, right? Not even close, right? That's what, now it's like this next level stuff. And when I see what he's capable of doing, and this achievement, catching a rocket and being able to reuse it, it's pulling this space exploration. It's pulling forward the exploration by decades. And why is that a big deal? You're seeing costs go down 10x. You're able to reuse these rockets. And not only that, he's not saying, oh, I told you so, NASA. You guys are a bunch of assholes. He's partnering with them. He's showing them. He's like, this is how we do it. This is how, like, he just wants the world to be a better place. And again, he has his critics, and I get it. But this is innovation. And I'm not even doing it justice by saying squared. Because if you look at how I love this because people talk about innovating in technology and AI and tokenization, all this stuff. When you look at space exploration and you understand how big the universe is, and a lot of people still believe there's no other life forms outside of Earth, which is insane. Because when you put it in perspective, the Milky Way, which our solar system is located, is estimated to contain 100 billion planets. Daniel, that's one freaking galaxy. There's 2 trillion galaxies. Okay, we're talking about 200 sextrillion planets, right? Many of these planets are located in habitable zones of their stars, just like Earth, right? So to push forward and to see how big the actual universe is. And thank you, TikTok, because it has the best scientists on there, and I'm in that feed, and man, I keep clicking like, and you got to see some of this shit because it's like another level of imagination that you're like, there's no freaking way. It's impossible. There's no way. And just to be able to accelerate this and push this hundreds, if not thousands of years forward, that we can actually have space exploration is unbelievable. And I hope there's people that are much smarter than him. And I bet you if you ask Elon Musk, that's what he's hoping for, that people are able to use that technology and build off of it and make the world better for the next generation. But for me to see what he's accomplished and how people, and this is, and we'll get into the election too, right? Because the election's 3 weeks away. But to see what the left, right, is doing to this guy, which was never part of the Democratic Party, which it is now, and you have to, that's it. Right? To try to slow this guy down is insane. I mean, you have to unleash it. You have to unleash it just for the power of EVs, which I'm amazed that the left hates him because he's done more for climate change than anyone in history with EVs and his technology, which, by the way, is open source and he shares. Enough's enough. You could hate the guy. You could not listen to him. You could say, I'm never going to use Twitter again or whatever. But just the Justice Department going out and saying he's a threat to national security and just constantly trying to sue him through Starlink and all this shit. Now you need him, right, with the hurricane and being able to, have people connect and communicate who are in trouble, right, from these past 2 hurricanes. It's just amazing how you're trying to slow this guy down. Again, you can hate him. I get the personality and stuff like that, but this is a guy that's trying to make the world better. And it's just incredible what he did. I was fascinated. I was just fascinated by what he's done. And again, I could have a different opinion, a lot of people out there, but it really, really is fascinating what he's done. And it's incredible. To see a rocket get caught like that, I was like, holy shit.
Oh, yeah, that's a math.
And we saw robots talking and just, and saying that these are going to be $20,000, $25,000, and they're going to be ready in 18, 24 months. We know his time frames. He's horrible, right, when it comes to his time frames. But just the fact that that's on the table and people are able to interact with them and that's coming and just to see where it's going. And also, who was it as well? It said he created this whole AI cluster system in months that takes, most of these companies out there years to create. I mean, Jensen was just like, this is, incredible stuff, what he's doing. He just got the right engineers, the right people working around him. And it really is incredible. That's all I can say. It's just incredible.
Yeah, I agree. It is incredible. Turning to politics.
Oh, boy.
Because we were joking about this in the office the other day because everybody going back to whoever you said, Ford or whatever, is like, this is the most important election and this is the last one. Everyone. But Elon is on record. I think he sat down. I have not listened to it, but I've seen heard some sound bites, read some headlines around him and Tucker Carlson. And he's talking about how this is going to be the last election if Trump doesn't win. Obviously, no doubt that the powers that be are going after Musk, just like Trump. When you switch and you go against the mainstream, then you get attacked. So Trump was a lifelong Democrat. Look at all the old videos. Oprah, everybody loved him. He was in rap songs. Now everybody hates him because he went against the grain. Same thing with Musk. He was this genius, save the world guy, which is total bullshit when you look at electric cars. But
and you have no one to blame.
That's another argument. He's not saving the world. But anyway, he switches gears, goes against the mainstream, gets in trouble. Now, in my opinion, it feels like more businesses are talking about politics and this election. Now, no doubt Trump brings in all kinds of stuff because of the, craziness he brings to the markets and the platform. But Jamie Dimon is very outspoken on politics. He's been on the fence and he hasn't endorsed anybody, but you're starting to see, and now with this big power generation, this huge power led by AI, other companies are talking about policies and politics on their conference calls. Power companies, Constellation Energy companies, your shipping companies are talking about politics. So I feel like it's a little bit more than normal, and maybe I'm just misrepresenting that because we're in the now, and of course politics are always heated. But the wild thing is that, A, do you feel like CEOs, the Jamie Dimons of the world, are talking more, or do you think that's just me, Frank?
No, I think they're talking more because, I think with the current party is you need framework and they don't want to provide framework, right? It's like more regulation, which I know the companies are going to hate. And we saw that in the Republican side of what happened during the credit crisis, right? So I get it. You can't say no regulation because these assholes decide to leverage everything behind, and taxpayers had to bail them out, and the banks are bigger than they've ever been, which we'll talk about in a minute because they reported unbelievable freaking results. It's the greatest environment ever for banking, for banks right now. And we'll explain it later. But I feel like they are more outspoken because even in crypto, right? We saw T0 get their special purpose brokers dealers license, right? Now there's a framework. Now you're going to see investment come in, right? And yet what do we see before that is an administration that's using the Justice Department to illegally close banks in crypto. Illegally close the banks in crypto, shut down crypto. Out of nowhere. I don't know who lobbied for that. Someone paid a lot of money for that to happen, but that's why they shut down the banks. That's why crypto wasn't really being... you have the U.S. market, which could be, the hub for the biggest crypto companies in the world, and it's not until you have regulation. So if you have a framework around it, and I think that's what you're getting out of Trump, where one, they both have track records, and one of them was like, okay, this is what happened under Trump, and we know what we're going to get. I think you know what you're going to get from both parties, and that wasn't on display when Trump debated Kamala the first time around. But now it is. And I think if you're looking at why they're talking about it more and why it seemed like, remember when you used to say, Trump, if you wore a MAGA hat, forget it. And by the way, I went to I took my kids to this Callahan Fair in Florida that we go to every year. And they had like 3 or 4 Trump stands there, and there were people buying everything in sight. Again, it's Florida. I
was going to say, we're in the...
we're in red. But it's... Now you're seeing even some people from Hollywood come out. Remember, if you did that, you didn't have a job anymore. And they're kind of leaning, going, okay, we need something. We need substance. What is Kamala running for? And now she's trying to and it's too late, because if you really see, and we talk about Polymarket, right, which I think is one of the most considerable, that's the poll to look at, because all the other polls are going to be biased. We've seen them all be wrong really, really bad the past couple elections and even midterm election cycles. That's the betting market, right? That's the betting market. Right now you're seeing Trump surge. Because as she's trying to catch up and do more interviews, which she did not, she still doesn't have substance. Like, they're still not asking her, like, why not just say, all right, we got immigration wrong. I mean, what the fuck is wrong with saying, hey, we made a mistake, this is what we're going to do to correct it? Because when you avoid that question, and that is by far one of 2 of the top biggest things next to the economy, and then you go on TV and you say, okay, on The View, like, or whatever it was on Colbert, and I think she said, yeah, how are you different from Joe Biden? Well, I'm not. I mean, I could picture her camp going, what the fuck did she just do? Why did she just say that, right? I mean, because you're saying change. Now you're saying it's not going to be any different. And I think the more she's speaking and the more she's talking and the more that we're realizing that, I wouldn't have her, run a pet store. Not saying that a pet store is easy to run. I wouldn't have her. She's never run anything in her life.
You say you're going to piss off a lot of dog
very
owners.
Scary. I shouldn't say that, because pet stores are probably really difficult to run. But you get my point. It's like a small business. Like, she's never really run anything. I think she was in charge of one thing, which is the border, and which was, a massive fuck up, right, across every scale, which I think everyone could agree with. But how do you fix it? And to say, oh, well, we're not going to fix it, or it's... the more she's talking, the more Trump is getting momentum. With that said, there's still 3 weeks left, and a lot could happen. But I think the 60 Minutes interview being edited was a very big deal as well. Why are you editing a video? We just saw Trump get interviewed by Bloomberg, on Bloomberg, and they were going after him. And back, there's nothing edited there, right? That's him. He's taking on a hard interview. He's going to ask questions. It's biased. Always, that's fine. Now,
talking about the one in Chicago yesterday? Yeah,
now you're going to see Bret Baier, and he's Fox, supposedly, and people worry it's not going to be a good interview or whatever. But let's see if she could just, put her feet to the fire, answer the questions. I thought she did good during the debate. She had a good script there of what she needed to do, and that was fine. But in order to really gain back momentum, she's got to go out there and she's got to answer some of these questions. And sometimes I think people identify when you just say, hey, you know what? I fucked that up, but here's what we're going to do to make it right. And people identify that because we all make mistakes. But if she's going to continue to avoid it and not even answer the question, it's going to be crazy. You're seeing that momentum shift right now. It's definitely shifting towards Trump, which, was in Kamala's, after the convention, and she came out, even after the debate, she was doing much stronger. But right now, it looks like, Trump's doing good in all the battleground states, and it will be interesting. And it is going to influence a lot of things because there's a possibility that we see Republicans right now win, like have full control of everything. And if that happens, it's usually not the best thing for the market because that's, you could say the credit crisis and things like that. So it's usually better when you have a split government, whether you're Republican or Democrat. This way, none of the stupid shit gets done. Like the far right is just as nuts as the far left, right? When you go really, really far right. So it is going to be interesting and it is going to impact your portfolios. But I think for business right now and with Trump, they're seeing, okay, we know a framework, we know what we're going to get, and it's probably going to be much better. And you're seeing a lot of CEOs come out and actually say that. So,
yeah, you mentioned this Polymarket, and I had not looked into this, and Poly market. And I was asking Frank about this because he said, oh, the lead has gone up. This is actually pretty neat, and I want some people's opinions on this, whether they would do it or not. Daniel at CurzioResearch.com. So when you look at Polymarket right now, you can bet. And what I like about it is it says how it works, the market price is the probability. So right now, Trump, if you want to buy or bet on Trump winning yes, it's 59.8 cents. So let's just round up to 60. So that means that there's a 60% chance. So if you put $100, and I'm going to do this now here just to show you. If you put $100 on Trump to win and he wins, you buy shares that go to $1. So your total would be $167.22 on 100. So you'd get back 67.22%. And the reason they say this is that these are, now I didn't see a study cited here, but they said, listen, this is real time, people betting with real information, and it takes a lot of courage and or beliefs to put your money where your mouth is. And I respect that because you can buy and sell these at any time. So if you buy this for 60 cents, let's say, and it goes to 75 next week, you can sell it. And the whole point here is I'm not saying this is 100% accurate, but what I like about this is that this shows the markets in everything. And what I mean by that is, Frank, you just said, if you look at this Polymarket graph, Kamala had a lot of momentum right out of the debate and such. She actually took the lead for a brief period. They show this chart. But we're in October. The October surprise is around the corner. Who's going to drop what dirt on who? Varney and Company, the hilarious guy on Fox Business, he said that Kamala's October surprise was going on Fox News. That was the big breaking October surprise. She's actually going to do an interview with Brett Baer. But the more I dug into this Polymarket, you can bet on anything, but I thought that was interesting, and I want to hold this. I want to look at sites to see what they've said in the past, but I do like the free market concept of everybody being able to bet on this and the conviction it takes to put money behind it. It brings all. I just thought this was really neat. I'd never looked into it. I'd always seen, oh, Polymarket says this or Polymarket says that, but I got to tell you, I was a little bit intrigued by it. And the last thing, Frank, is when I went on Coinbase. I told you a while ago about I logged onto the Coinbase app and they had this advertisement, this shield come up about protecting crypto and getting into the crypto advocacy and getting it to Washington for regulation, as you said. Coinbase on their app, Frank, says there is over 1.7 million crypto advocates and that they have donated over $179 million to crypto pledges. Mm-hmm. I'll be honest, that shocked me. And there's an old saying follow the money. And again, right now, the momentum has shifted from Kamala to Trump. It's going to shift back and forth probably another couple of times between now. Again, 3 weeks is an eternity in politics. But it was wild to me, and I guess I want to ask, are you surprised about the 1.7 million people and 179 million in crypto donations? I am. I guess I didn't realize that they were taking, I don't want to say that serious, but that's a lot of money. In the world where we live in trillions of dollars and billions of dollars and printing and stuff, there's a hell of a lot of momentum there. And I don't think that's a coincidence of why Trump taking a big lead on these types of markets and Bitcoin rallying is not a coincidence.
You know what happens to Coinbase And we just saw that like amazing news has come out in the past probably 3 weeks in crypto, where you're having Bank of New York Mellon allowing custody, right, of crypto, which is massive, right? That means there's so many third parties involved. It makes it so difficult, right? Now you have custody. You're basically operating as a Morgan Stanley or Goldman Sachs now, right? You're able to offer different things, products or yields, have custody of the funds, raise money on your platforms, provide automated trading, all of this, right? And now all this stuff is coming. So when you look about the amount of money that's been raised compared to how big this market will be if you have regulation around it and you have a structure, there is literally hundreds of billions of dollars on the sideline wanting to invest in crypto because it is the most fascinating technology. Listen, this is what Polymarket is, right? It's a decentralized platform, meaning that it can't be corrupted. And if you're not familiar with crypto, you're like, well, how come we have all these hacks and stuff? You have them on the bridges, right? Because a lot of the blockchains don't communicate with each other. Now you have companies like Chainlink that make that seamless. But you have these bridges to move one crypto to another and have these technologies work together. This way you could use separate blockchains. And, again, you have Bitcoin blockchain, you have all these level 1 blockchains, whether it's Ethereum or whatever. But to communicate with them, you see the hacks happen in the bridges, not on the level 1. So the fact that you have this where you could run an election with zero interference, if they really wanted zero interference, right? If you didn't want illegals voting or whatever, or all the bullshit or whatever, it's very easy to put on a decentralized exchange and you would have no problem. And you'd have the results pretty much in 45 minutes after each state closed. Instead, what do we have? I watched it on NBC, I watched it on ABC, I watched it on a lot of liberal channels. Get ready, because it's going to take a while to count the votes. How does it take a while? We're not a third world country. It's very, very easy. Just show your license. It's very, very simple. And then it's very easy when everything's automated to count the votes. When you're looking at that, the Polymarket platform, this is decentralized. This is the vote. This is money. This is like Vegas, right? So there's no outside influences in this. And when you see that, and I just pulled it up as of yesterday, here's the latest stats. Okay, it's all about the battleground states, right? You're not going to have New York flip. You're not going to have Texas flip. You're not going to have Florida flip. You're not going to have New York flip, right? Obviously, but when you look at the battleground states, it's getting insane right now. Arizona, considered battleground state, Trump is favored on Polymarket. He's 68%. This isn't 54%, right? Georgia is 64%. North Carolina is 63%. Pennsylvania is still close, 54%, Michigan 52%, Wisconsin 52%, but he's leading in all of those, where I think she's leading in Nevada by like 2 percentage points. And we have 3 weeks to go. So what's going to be the big surprise here? I don't know, but in terms of why we're bringing this up in your portfolio, it is going to matter. And it seems like, business-wise, what Trump's announcing in terms of favorable taxes, and people are like, it's going to result in inflation, everything. Look, we have inflation creeping back into the market right now. I mean, you have a couple of Fed governors come out, a Fed president's actually come out. I don't know if you saw this, Daniel, saying that, okay, we may have to slow down. It's probably not going to be as fast as we think it's going to be in terms of lowering rates. So, when I look at this, I think the markets are going to do much better on a Trump win, because there's more policy. I think we know what we're going to get. Well, we really don't. Is it going to be the same as Biden? Because you said it's going to be different. I'm not Biden. That's what she said. Now she's saying I'm exactly like Biden. What are the policies? What are some of the things? Because when she did run for president, remember, this is a person that was completely unpopular with her own party, right, with the primary. First one out, goodbye, gone, right? Nobody liked her. And now when she ran, we seen videos of what she stood for, and we're playing them. And she's like, no, I didn't mean that. I didn't mean that. And it's very difficult to say, okay, it's okay if you change your mind. But why'd you change your mind? The fact that we're not getting those answers, I think you're seeing that small audience, which is massive in these states, in these battleground states, because you're not going to have Republicans or Democrats flipping no matter what you tell them, right? But that middle ground part of it, it's, you want to persuade them. And I think that middle ground right now is what you see in the polls is they're like, listen, at least we know what we're going to get out of Trump, where we still really don't know. And let's see if that changes, because she's got to do a lot more interviews. And let's see today if she does better, because the past couple of interviews that she did on favorable platforms, Colbert and View, were a disaster. 60 Minutes, disaster, right? She's just fumbling, just going all over the place, and they edit it. How do you edit that? That is insane to me. Like this is a person that's going to He's a leader of the free world. Everyone should know, just like Trump, what things he's an asshole about and things that he's serious about and how he says everything about him. We really don't know everything about her. And I think that middle ground really wants to know, but it is going to impact, lots of companies. We're going to see that. And, 3 weeks away, it will get interesting, guys. It's things that you have to decide, things that you have to talk to. Everyone should go out there and vote. Please go out there and vote, because there's people, and now that I'm more involved in this than ever when it comes to military and stuff like that, and Army War College, there's people that fought for that right. It doesn't matter who you vote for. Just get out there and vote. That's your right. But we'll see what happens, and it's probably going to be a real shit show before then. Expect lots of surprises in 3 weeks, because both of these, they're very, very desperate. There's over $1 billion that went to the Democratic Party. They're not just going to give that up. You're going to see a lot of craziness going on both sides leading up to this. So, yeah, good luck, and it should be some fun.
Another fun trading stock. Look at DJT, the Trump media. That's a fun trading for the election.
All over the place, right?
Yep. But it's more than doubled since its lows of end of September. It was down around 13. Now it's 29 and change. Up 7% today. It's up Got halted yesterday for trading. So it
was up 10% to down 7%.
It's a wild deal. But yeah, interesting stuff on Polymarket.
Yeah, so you got the Trump media technology. You also launched a cryptocurrency. Again, nonsense. Like it's just craziness. But Trump
Which
media
failed.
The Trump media, it's. I looked at the market cap. It's $6 billion. This market cap of this company, which I don't think it has as revenue of like nothing, right? 3 million, which is nothing. But I could see this being a big media company in terms of signing different deals and getting people to. Again, it's all about data, getting data to the platform, and who else is going to sign. Will they sign under this brand and stuff? If it's more like a Fox brand type thing, we'll see. But it is trading at astronomical valuations. But it is trading based on. Him getting elected, right? And now that the odds are in his favor, you see more momentum in that. But it did get halted out of nowhere yesterday. I don't know what that was about. Like people were confused. I was like, why did it get halted? But unbelievable. So anyway, when I look at this, and if Trump happens to win this election, Democrats have one person to blame, and that they got to look at themselves in the mirror, because you could have won this election if you did the right thing by two people. One is JFK Jr. You basically did Bernie Sanders on him. You're not running as independent. You prevented him running independent. You could have he's a Democrat. You could have got him on your side, which is very big about certain issues, but instead you went after him. You destroy his credibility. Again, that's what I feel like the left does. Like they destroy your life if you don't agree with them. And then you had Elon Musk in your corner, and you did not invite him to like the biggest climate change meeting about EVs. He produces more EVs than every single one of the 30, 40 companies that they invited to the White House. They didn't invite him, right? So for me, just look yourself in the mirror of why this happened, and which is
if
you lost two major people that have massive followings
and time to go
in social media, massive followings in social media, just huge. And you had them under your umbrella, and I don't know why you went after those two people. And I think if they lose, that's going to be a big part of it, because Musk, they just showed he generated, he donated $75 million to the super PAC. I think 70 million went to Trump and 5 went to just other elections and stuff like that for Republicans, which is crazy.
The money's even on both sides though. Each team has their billionaires.
They do, but you had Musk and JFK have massive, massive followings on social media, massive followings, and they're going through the whole section of look at why am I being castrated for? Why am I getting investigated every day? Why is this happening? And you lost a big part of the audience. I think that's significant. So let's talk about stocks. Amazon signed a nuclear deal. It's one of many nuclear deals that have been signed by the biggest companies, right? The hyperscalers, and investing in $500 million to develop small nuclear reactors. This follows Google's news, do the same, which was with Kairos Power. And they said they're going to launch these things by 2030, which is 6 years from now. Again, these small nuclear reactors. Daniel, what are your thoughts?
I think this is great. This is just another kind of just another domino in the falling effect that's going to be great for everything from power generation to components and switches to services. And we've been on this big theme. Even if AI doesn't turn out to be the greatest thing since sliced bread, you're going to have amazing returns from these. We'll talk about that later in other podcasts, but I just think this solidifies and really puts an exclamation point on whatever you can say AI, you can say data centers, but the growth in this sector from all different kinds of segments and businesses is still in the earning innings. And I mean, big tech is loving nuclear. I mean, this is, 2.5 years ago, nobody was talking about small modular reactors in the biggest way. I mean, people have been talking about them in small areas and such, but you didn't have the Amazons, all the big tech players. You've always had them pledging for net zero. And that's very misleading, but we live in a misleading world. You can say we're net zero because you can just turn around and buy credits from the government. That's BS. That's not actually doing anything, but nobody cares. It's all about this feel-good economy. Now you're actually seeing them sign deals, put up money, sometimes billions of dollars for long periods of time, several years. Microsoft did a 20-year power purchasing agreement. I just think it just solidifies, and I'll talk about this more on Wall Street Unplugged Premium, but if you just started from right now on Bitcoin, AI, and the demand for power and electricity, there's an easy argument to be made why the odds are still in your favor. And that's if you just started looking at it right now. And that's powerful because we've been on this. We've already had a lot of winners. We've had some losers as well, but we've definitely had bigger winners between power companies, component companies, and servicing companies. And this is just one of the easiest layups, I think, in investing for the next few years.
Yeah, I will say this. No, you're right. And I love getting the email saying, Frank, I learned about nuclear from you, very early on and invested a lot of companies early on that they're up tremendously on. And I love that, right? And it's been, a roller coaster ride, probably the last 5-6 years, and having Amir Adnani on the podcast a lot and really explaining this and stuff is really cool. A lot of people own UEC much, much cheaper than where it is right now. You're seeing these hyperscalers, 3 Mile Island, they're starting up new nuclear plants with Microsoft. Again, they're buying this power out 5, 10, 20 years. I think the small nuclear reactors, right? So I don't get this trend. I don't understand it, okay? And when I say I don't understand, they say they could power up to 300 megawatts. Right now, it's more like 100 megawatts. This technology is not even close. You could say, well, they have a couple operational. They have 3 operational, 2 in China, 1 in Russia. And the reason why is because their state could approve things a lot quicker than here. And when it comes out to the federal level, when it comes out to state approval level, you don't know the technology that well. You don't know what happens if one of these things, again, you talk about nuclear, right? So, we have the nuclear plants and we know how to operate those. Those are great. This is different. And not only that, when you look at how much power they're offering, whether it's not going to be 300 megawatts, it's more like 40, 60, 80. It's definitely under 100 megawatts. And it doesn't even move a dent. It doesn't even move the needle at all, put a dent in it, whatever. But to me, I see this technology 10 years plus out. And there are a few companies that are doing this. It's hard to really invest behind it. And you'll see what, some of these things, again, these are SMR, small nuclear reactors. But even when it comes to Google, they said they're going to launch these things by 2030. They're out of their fucking mind. They're not launching these things by 2030.
Oracle's on the same boat. They're doing it.
They're not going to launch. And not only that, when I look at the demand that you're going to need for power, which I still think that Bain Capital finally came out. Hopefully they listen to this podcast. Those guys are brilliant over there. But we've been saying this for the last 5-6 months, that the power demand that you're going to need is at least 50% more than the highest projection out there. And now they're just starting to raise those projections. It was 30 gigawatts. It was by 2030. It was 35, 40. It's going to be 65 plus. The new hyperscalers and the new data centers going up by hyperscalers are requiring 1 to 4 gigawatts. And you're looking at these things powering 60 to 100 megawatts. Doesn't move the needle. Okay, you're going to need at least you're looking at 60 gigawatts of power by 2030, just from data centers by the hyperscalers. So to me, this doesn't move the needle. The technology is not there yet. To get this approved in the U.S. is a lot different than having a couple in, again, 2 in China, 1 in Russia. You have about 6 major companies that are trying to build these things. The technology is not there yet. I think there's so many better ways to play this. And we're going to talk about that in tomorrow's podcast, which we do give ideas. So we're going to give lots of ideas. I'm going to talk in detail about uranium sector, about a couple of companies that I like, one that I don't like, which everyone likes, and I'm going to explain why I don't like it here. I had a big debate, huge debate on Twitter, and it was fantastic, actually, because I had a lot of people come in and say why they like this, and it was constructive. It wasn't like, Frank, you're an asshole, you don't know what you're talking about. It was a great, healthy debate, positives, negatives, going back and forth, and people own this stock, and they've done very, very well in the past, but it is one of the leading, most popular names in the whole industry. It's not Cameco, and I don't understand why anyone would buy it here. And I really went into that on Twitter at Frank Curzio. If you follow me, you get lots of responses, probably more responses today. I spent like hours on it yesterday because we just great people emailing in that follow this industry, going through it. And yeah, it was just incredible. It was a healthy debate, and that's what I love. I love those type of debates. I just don't think, this specific name is good. And I'll talk about some of the names that we do like. Perfect. And that's going to be in tomorrow's podcast. So, uranium's on fire right now. It's very, very good. It's not just uranium. It's going to be solar. It's going to be natural gas, which is, shitty right now, right? I mean, holy cow. I just think if you have a 5-year outlook on it, which again, it's fun to trade energy. It's really fun to trade energy, man. It's the most volatile market. It's crazy. That's why you see so many blowups in that area. But if you're looking long term, we're sitting on a massive, almost unlimited amount of natural gas that could be used to power a lot of this. And I just feel like that's not really being mentioned. And that's where most of this is going to come from. Everyone's talking about nuclear. But there are good plays within nuclear, uranium to definitely invest into. I think you're going to see much, much more upside there. Just supply and demand imbalance, it was huge before hyperscalers. It's even bigger now, but we'll cover a couple of names because I do want to get to one last thing here, which is not just one last thing, but a couple of companies, because we're in the middle of earnings season, at the very beginning of earnings season, and the banks reported. And holy shit. I mean, for everyone wondering about the banks and, we're going to have a banking crisis, I don't know about that. When I see the 4 largest banks generate $106 billion in sales and $27 billion net income last quarter. I'm not talking about last year, last quarter, right? And everyone's worried. The banking crisis. There's no banking crisis, guys. I'm sorry, there's no banking crisis. Don't talk about the unrealized losses from bonds that they can hold to maturity. It's going to be fine. Then don't talk about the $2 trillion plus in assets on their balance sheets, right? Again, people are going to say whatever they want to scare the shit out of you. The banks and the banking system right now, Daniel, it's the best conditions I've seen for banks maybe in the past 15 to 20 years, because what did you have 10 years ago? You had super low interest rates, so their net interest margins was shit. So what did they do? They charged fees. You had a healthy M&A market. You had a healthy investment banking market. Everything was great. And then what do? We raised rates by the fastest pace almost, in the history of the Fed, right? In terms of the percentage that you raise rates from 0 to 5+ short-term rates. Now you have, holy shit, we're generating a shitload of money, net interest income, right? Able to lend that money out, generate a huge portion of that. But now you're seeing rates come down. And the Fed just said, well, we may not be as aggressive. So what do you have? You have your net interest. You have the NII margins are great because interest rates staying high. So you're still generating that income. And now what are you seeing? You're seeing the M&A market, the IPO market. Did you see all of these banks report? They had record results across the board. Yeah, their assets under management are through the freaking roof. Again, we'll cover a lot of this in tomorrow's podcast in Wall Street Unplugged Premium. If you're interested in that, go to our website. You can subscribe. It's $10 a month, right? I don't think we still have a special where it's $1 right now for a month, and then you could cancel if you want. I tell you, about 95% of the people never cancel because the value that you get and the ideas that you get are really incredible in that podcast. But record results, record M&A. You're seeing M&A come back. You're seeing investment banking coming back. You're seeing their assets under management explode higher as the market goes higher. It's a perfect environment where they're making money almost of any single thing that they do. And that's why you're seeing these things trade at all-time highs. And with interest rates probably going to stay higher for longer, when I say higher, above 3.5% for longer, they're going to make money in every aspect of their business across the board. And these guys are well-positioned for it. So it's not surprising. JP Morgan blew out the numbers. You look at Goldman Sachs, great numbers. State Street reported record high assets under management, $4.7 trillion. You look at Schwab is $9.9 trillion assets under management. I think, Daniel, I said this offline to you yesterday. I said it was State Street. Schwab has $10 trillion. Did you know that?
I didn't know they had that much.
I mean, that's close to BlackRock. BlackRock reported as well, right, which you covered. I mean, just really good results around the banking.
Yeah, they have an $11.5 trillion. Just a couple on real quick. My favorite regional bank reports after today's earnings. That's Home Bank Shares, HOMB. And then not only did you say that the big banks are no banking crisis, a lot of them are doing record results. One wild thing is to also look at tomorrow morning, Blackstone, big private equity company, BX is the ticker there. I'll be going through those guys, them and another couple of other PE firms, because you want to see what they're talking about on infrastructure. One quick thing, I'll talk more about this tomorrow. When BlackRock reported, Larry Fink said that over the next 15 years, this includes data centers, because he's big on AI as well and Bitcoin. But on the data center play, infrastructure play, and re-electrifying the grid, basically, over 15 years, he threw out a number, Frank, that was $75 trillion. Now, that's a long time frame in A, 15 years, B, a shit ton of money. But even if he's half wrong, you're talking about the amount, and I know we can rack up debt really quickly here in the U.S., crossing 36 almost, but try to put that in perspective. If he's half wrong, that means that you're going to have $30-some trillion invested over time. And these guys, that's why we put that in the Dollar Stock Club. It's up a quick 5-6%. We did it ahead of earnings because they literally told you the second half is going to be much better. We got our hands in everything. We're the most connected. It's just amazing. So I'll be looking through private equity firms like Blackstone tomorrow morning and over the weekend, because whatever they hint at, they're looking at, and I'll give you a hint right now, it's the smaller labor and what's the word I'm looking for, Frank, when you have a skill? Trade. Yeah. So Wall Street Journal, I did not read it because Wall Street Journal, I got to admit, I've been very disappointed with them lately.
It's election season.
Yeah, but I don't care about that.
If
that's
you
not
see
an
CNBC,
excuse.
I like CNBC online.
That's not an excuse for me. But they had a decent article about who's the new millionaires in HVAC. And the only reason that caught my eye from the Wall Street Journal is because private equity firms are starting to look at these labor-intensive, skilled trades like HVAC, heating, ventilation, air, electricians, landscaping. I was talking to a friend of mine in the landscaping and custom building, and they're getting approached by private equity. It's just, so that'll be fun to look through Blackstone, and then you can kind of walk backwards on that and get some stock. So there's a lot of good ideas unfolding around all the money sloshing around. So we'll take advantage of it.
No, definitely. And a couple of things I want to bring up too, because there's two companies that reported which were interesting, which is ASML. Fell sharply. They, by accident, reported earnings. You see this happen sometimes. It's just, something got released or whatever. They had to announce their earnings before the market closed yesterday. And it fell sharply. It fell like 17, 18%. And it brought down the whole sector. But it shouldn't bring down the whole sector when you look at the details, because weaker demand for PCs and mobile specifically. They said the memory chips as well, but they said AI is still on fire. Again, I haven't seen any evidence at all that AI is slowing down, or spending slowing down. If you have it, please send it, frankcurzioresearch.com. I haven't seen anything. Not one data point out there anywhere of how this is slowing. A lot of people are talking about it, but again, they're trying to sell you something. We like to tell you the truth here. But yeah, we haven't seen that at all. But geopolitics as well, because China, what happens with tariffs and things like that, and how, the chip sector, how really, even right now, forget, Trump is going to raise tariffs tremendously and it's going to cause inflation. And we're hearing that, right? A lot. It's what he's being questioned about. But even before this, the current tariffs, and even getting, more tariffs on China when it comes to chips, what China was doing is they were stocking up. They were stocking up tremendously, which led to a lot more demand for this company. And now you're seeing a lot of tariffs kick in where they're not seeing that demand. They're no longer stocking up. And not to mention how China has been selling off. And we said, you got to be careful. We have a trading newsletter attached to Wall Street Unplugged Premium, and trading newsletters, that's fine, but overall China, we said, look, I just don't see it. I just don't see that. You're in a deflationary environment. You're not in the environment that we're in. The government's not just going to be. They've been trying to do this for 3 years. The government trying to inflate this market. And all of a sudden, everyone thinks the latest measures are going to do it. They're not getting people to spend there, and you're seeing it across the board. You're seeing with ASML. You're seeing what other companies are reporting with their China operations. You're just not seeing it. They just had, that week or something where they have that. Big retail sales of it. That didn't do that well for China. But ASML said, listen, AI is still on fire, but not all chip companies are created equal. Some of them have more exposure to that and more exposure to the growth markets, but ASML got nailed, pulled down the whole industry. I would probably use it as a buying opportunity to buy a lot of your favorite chip stocks that are more involved in AI, including NVIDIA, which we're in at a great trade in our trading newsletter. We bought it on a nice pullback. The last thing, too, is United Health. I don't know if you saw that, Daniel. So United Health Care reported and pulled back a little bit. I think it's a tremendous buying opportunity. Their costs were higher, right? So that hurt them. But still, they met estimates, and I thought they're going to report double-digit growth in revenue and earnings going forward annually for the foreseeable future. I think it's a screaming buy here. There's another one that's trading our newsletter. We're still up because we recommended it early. And even though it pulled back like 6-7%, I think it's an incredible buying opportunity because all those costs are really short-term in nature and they're transitory, including what they had to pay for the recent cyber attack, which I don't know if it's me, Daniel, But is every company announcing that they got attacked? Like they have a sign. It's like everybody. Seriously, almost every company I see, it's almost like a formality where people don't even care anymore. They're like, oh shit, okay, don't worry about it. You know, I see it so much more. Like it used to be such a big deal when you heard that. But I thought there's one interesting thing I wanted to point out because they talked about the high cost, but the biggest contributor to higher costs, and get this, they said was the rapid acceleration in the prescribing of certain high-cost specialty medications, primarily used for those who treat cardiovascular disease, autoimmune disorders, and cancer. And they said, I'm quoting, "We believe a contributing factor to this acceleration was the Inflation Reduction Act." You can't make that up. That is right. The Inflation Reduction Act is resulting in more inflation because they're charging higher costs for certain prescription drugs, usually the high cost of specialty medications, which I found fascinating. So the Inflation Reduction Act, which is kind of like a slap in your face, actually, Cole, I think it's hilarious. But that's actually what they said, UNH. I think it's a great buy, and they had their conference. I'll give this away to you guys because we're up on it in our other newsletter, in Dallas Stock Club. They had not 100 billion, but 100 million share buyback they announced in 2018. Okay, which is incredible. The stock was probably half of what it was right now. It's a massive, massive buyback, and you could say maybe they bought shares back on an average of $600-700 a share, whatever it was. I'm sorry, maybe 500, 550 a share. That is done. If you look at how many shares that they bought, it's basically done. They have their investor meeting, right? The annual investor meeting on December 4th. They're going to announce that buyback. This buyback's probably going to be $50-60 billion worth. I think it's going to result in 10-12% of the float. This is a company, believe it or not, is one of the highest free cash flow generators in the world. Probably the highest outside of the hyperscalers. Okay, they generate $30 billion in free cash flow annually, and they're going to do that for the foreseeable future. And they have a nice dividend. Now they're going to buy back a shitload of their stock. They're seeing incredible growth. It's at a cheap valuation right now, and you're going to see it December 4th. Get in ahead of that because that's going to be a major announcement. I think it's going to drive the stock. It was trading at new highs before they reported. It ramped up a lot, so it was a sell-on news event. I think it's going to provide a good opportunity because this thing is going to go a lot higher from here, especially after announcement December 4th, and let's see if that happens. It should happen because they're just about done with their original buyback.
Well said, December 4th. And we're still up a little over 15%, even with yesterday's pullback.
Yeah. So yeah,
it's a good call, Frank.
Thank you.
He's like, hey, let's put this. And I was like, oh, gosh, I got to read about this company. I was like, oh, okay, this makes sense.
No, it's really cool. It's really cool. So yeah, that portfolio is really kicking ass, which I love. So, and that's a trading point.
It is a bull market, though. It should be.
Yeah, but we're still doing very, very well. So, which is cool, which I like to see. I mean, it's not like we pat ourselves on the back. We like to see people making money, which is awesome. So, I'll end with this, guys. Listen, we're going to be closing our private placement. Thank you so much. We raised a lot of money. It's awesome. We're offering a 10% dividend for accredited investors who are coming in. It's a conversion into our token, which is a direct equity stake in our company at $350. This money is being used for pure growth. It's not being used to pay the bills, not being used to raise salaries. We're seeing growth across all our platforms. We're seeing traffic increase. Thank you so much. A lot of that is to you. We're seeing podcasts. Now everything's really going higher. We're going to start generating, some significant revenue from our consulting business, which is great. Another reason why I went to Vancouver, where we're helping these companies establish their brands and tell stories and things that we've always done that we should be getting paid a lot of money for because they pay a lot of money for those services. And a lot of other people have let them down tremendously, what we've seen in the industry. So a lot of these companies are now coming to us and saying they're interested in working with us and building their brand, which is what we want to do. So when we recommend these companies, we want a lot of these small cap companies to build their brand. We don't want it to be a trading opportunity. It goes up tremendously and comes down tremendously. And we really structured the business to position ourselves to see tremendous growth in this area and something that we're very excited with. And we're going to look to scale that part of the business along with the publishing business and build both of these things out tremendously since we're seeing growth. But it's very favorable terms. I'm a 60% owner of the stock. I came in for another $100,000 into this round because I want that dividend. It's a 10% dividend, which I have to pay. And if you're going to wind up converting this at $350. It means that we're really kicking ass and we're rocking and rolling. If not, I'm going to be paying that 10% dividend, annual dividend, cash dividend annually. So I haven't seen a deal like this on the table because I get pitched deals literally every single week because every company's looking to raise money and nothing's close to the terms of this deal. And you get invested in a company near the ground floor, which is really, really exciting. So we're about to close that. And after we close it, you can't invest in it anymore. If you're a credit investor, you're interested, you could hop on a call with me. We could send you the documents. You could ask all the questions. It's not going to be a sales call. You could ask your questions and then decide. But I would say 90% of the people that I got on a phone call with all wind up investing. When you look at the terms, you look at where our company is heading, and pretty exciting. A lot of that, again, is because of you. I just want to say thank you. So we're going to be pretty close to closing that out soon. So questions or comments, feel free to email frankcurzioresearch.com. And Daniel, any final thoughts? I feel like I just started talking a lot at the end with UNH and ASML.
Nothing from me. See you tomorrow.
See you tomorrow. And tomorrow's going to be interesting. We're going to talk about uranium plays. We're going to talk about individual banking plays and come out with a brand new trading pick that we really, really love. A name that you definitely heard of, that you probably don't like. But it's really cool stuff. We're going to have at least 10 different ideas to talk about in our newsletter. God, getting confused, in our podcast tomorrow, Wall Street Unplugged Premium. And we'll see you guys then. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. The big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today, and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.